BHP Billiton's record half-year profit of $10.5 billion is a big number. At that rate, a full year's effort would eclipse the GDP of many nations, ranking it well inside the top 100, putting it alongside the likes of Latvia and Tanzania. But no country, large or small, could match BHP's 72% growth rate. Being the size of a medium-sized country isn't without its problems. Questions of national interest help scuttle its big plans with Rio Tinto and Canada's Potash Corporation. And then there's the delicate issue of international diplomacy, which surfaced after the company was mentioned in the US consular cables provided by WikiLeaks to local newspapers. Spoke to BHP Billiton chief Marius Kloppers at the end of a busy week. Well, Marius Kloppers, if I can just deal with the WikiLeaks cables first, did you offer to provide secrets to the Americans?
I more likely asked whether there was any knowledge about what was going on in the commercial space. You must understand that this was during the time that we were trying to reform the iron ore marketing system, and we were a little bit skittish about, what was going on.
Right, but when you say you're more likely, do you remember the conversation?
I certainly don't remember offering anything. I don't know what I know.
Do you have secrets to offer?
Not that I know of.
And do you think that BHP actually was responsible for killing that Rio Chinalco deal?
I think that we certainly had an opinion about it at the time. I think we're on the record as saying that we thought that the iron ore system had to reform in pricing, and we thought that if a customer owned a piece of that system, the probability to get market prices would be more difficult.
But do you think that your opinion was decisive?
No, absolutely not. I mean, we one opinion maker in a very large pool.
Now, on the question of the Potash Corp bid, you bid $130 per share.
Yeah.
The price is now $186 per share.
Mm-hmm.
They said at the time, Potash said that your bid was too low. In fact, that's the way it looks now, doesn't it? I mean, weren't you a bit stingy? And in fact, didn't that result in the bid failing?
No, I think it's always being a prophet is always a little bit more difficult than being an historian. I think that we offered a fair price, a market premium at the time that the bid was launched, and this was about a different set of issues, not about price at the time. Shareholders never got to have their say about this.
But they must be feeling pretty happy now, I would have thought, Potash shareholders.
I presume so. Haven't spoken to them since.
I mean, I ask because the perception is that there have been a series of failures. The Rio bid, the Rio JV, and then the Potash bid, all of which didn't work. Do you reflect back on that and think, actually, I wish I'd done something differently?
There's always something that you can learn. There's never an experience without a learning. But you've got to understand that we always come back to, at what price can we do something where it creates value for our shareholders? And the criterion is, do you create value, not do you complete something? And I suspect rather that that's going to continue to be our approach going forward.
Because now you're saying, actually, we're not about acquisitions anymore. We're all about organic growth and capital expenditure. Mm-hmm. That's really, in a sense, because the acquisitions didn't work.
I don't think so. If you look at our CapEx, which got a lot of press yesterday, our CapEx has been growing at 20% per year over the last 10 years. If you just extrapolate that trend, you get to the number that we put out yesterday. So what we're saying on the CapEx side is it's business as usual. These are the things that we're going to invest in. It's a large number, but it's progressively been growing. On the M&A side, I think the only comments that I made is that in certain of the products, prices are very high, and therefore price expectations on assets are very high too.
I've spoken to some of the analysts, there was some disappointment that you're talking about $80 billion of capital expenditure over 5 years, but you actually didn't announce anything at the time. Why is that? Did you actually put anything up to the board at the most recent meeting and get knocked back?
I can't comment about individual items at individual board meetings. What is pretty clear is that we have been working very hard over years now, getting projects like Dornier, Hay Point expansion, Caval Ridge project in the Bowen Basin, for example, and Olympic Dam down south, progressing that. And really the 5-year plan lays out how much capital those projects, which our investors know very well, are going to consume.
Looking ahead at the next 5 years, are you confident that you can actually build everything that you need to build because there are lots of skill shortages, difficulty of sourcing not just labour but the companies, the capital equipment needed?
Yeah.
I mean, do you think that you'll hit any constraints?
Look, we've worked very hard at building an organisation that is very simple. We've invested a huge amount of effort at building these 5 big hubs that we've got. In Australia, 3 in particular, Olympic Dam, Perth out west on the iron ore, and then the coal in Brisbane. These teams are in place. Yes, they're going to expand, but I'm very confident that that gradual build-up of capital that we've seen and that we're going to continue to see is one of the most sustainable in the industry. If we can't do it, I suspect others are going to have great trouble.
Where do you think most of the capital expenditure is going to be? Where are you focusing your attention over the next 5 years? Is it iron ore and coal?
What we've said in our results is that there's basically 5 major areas for capital spend. We've got Olympic Dam, we've got the Bowen Basin, we've got iron ore out in Western Australia, and then in addition to that we've got oil and gas, and then the potash mines in Canada. Those mines will consume the majority of that $80 billion capex program that we laid out.
And is M&A completely off the agenda now?
No, cycles change, and in particular my comments yesterday should be taken in the context of the prevailing prices that we see today. I mean, 6 months' time or a year's time, something else may come up, situation may change.
Is there a sense that you, in particular in oil and gas, that you, in order to get the expansion you might desire in oil and gas, that you need acquisitions in that area?
I think it's pretty clear that in certain of our products, iron ore being the prototypical one because everybody's looked at that so much, we've got some regulatory constraints in non-organic growth of that business. But in many of the other products, potash, copper, and oil and gas, there are no such constraints. And obviously the oil and gas market is a very large one where there may be opportunities going forward.
As you look at the capital expenditure, what sort of growth rates are you looking to, are you targeting? Because you were quite disciplined in acquisitions.
Yeah.
Obviously, you're turning things back. What do you require?
Well, we're sort of a boring company. A couple of years ago, we said that our typical returns that we get on greenfield projects is about 15%. Brownfield may be a little higher, 25% or so. I think those numbers are still in the right ballpark. And how that translates into growth, again, perhaps referring to some comments we made a couple of years ago, on an organic basis, we think that 5 or 6% growth over many, many years is imminently achievable.
It's compound annual growth.
Indeed.
And your margins at 44% are roughly back to where they were at the beginning of 2007.
That's right. That's right.
Do you think you can, with what you can see on the horizon, that you can expand margins from here further?
You know, there's always a little bit of a differential outlook on the various products, and I can't make an exact forward-looking statement. But what I can say is there are certain products in our portfolio, particularly iron ore, where India is not exporting iron ore at the moment, where there are other supply constraints, where people haven't invested, which looks very, very good over, the next 3, 6 and 9 months. In fact, just today, we've probably got a record price achieved FOB Port Hedland. So that product looks very good. Other products look a little different. For us, it's a question perhaps where the cost structures go, but, you know, I feel very comfortable that we're going to have healthy margins going forward.
How long can these prices be maintained, do you think, particularly in iron ore?
Simply put, over the next 12, 18 months, perhaps 2 years, there's not a substantial amount of new capacity coming on. And it's more an issue of the supply side rather than the demand
building
side.
A lot of capacity.
But a lot of it is only coming on later. A lot of companies cut back capacity during the global financial crisis. We're now 2.5 years on, and normally that capacity would have delivered, but the investment was just not made.
What's your view about the Chinese economy?
Look, our basic view about commodities is that it's going to be a story of supply lagging that is going to give us good prices. On China, a lot of people are talking to me about inflation, overcorrection and so on. But I don't think we've got the situation that we had in the 90s, where the Chinese government let inflation run away completely and then had to pour a lot of water on the economy. We simply have a managed slowdown here, so I think that Australia is going to be in a very good position going forward.
Should we read your capital, the way you're doing your capital management, as an indication of caution, in that you have increased the dividend, but not very much? Most of it's through buyback, which doesn't obviously have to be maintained. I mean, you could, in fact, double your dividend without losing any sleep at all, but then you'd have trouble taking it back.
I think
Does that indicate caution?
there is always a degree of prudence. This is a company that's not cut a dividend since the Great Depression. So it's had 70 years of uninterrupted, flat or positive dividend growth. We want our investors to see the dividend as an annuity. If we've got surplus cash, we would rather return it to our shareholders in different ways.
But you don't have any desire for BHP to be a yield stock.
You understand that BHP pays a larger dividend than the next three big mining companies put together.
And finally, the discussions with the government over the tax, the resources tax, where is that at? And do you feel confident you're going to end up with a result that you can be comfortable with?
The reality, Alan, is that most of our discussions took place last year, during the middle of the year, when the MRRT was discussed. The reality is it's the Policy Transition Group that has had a lot of discussions since then, and obviously from here onwards the implementation. But in essence, you know, on policy elements, the company hasn't had really meaningful new policy debate for half a year now.
Did you see the backlash this week to your large profit politically and pick up the phone to your advertising agency to start thinking about another ad campaign?
Probably something to think about, how we communicate what the benefits to Australia are of our company investing $80 billion, paying $5.5 billion of taxes last year, and creating hundreds of thousands of jobs if you count the trickle down. I think that we probably can do more to communicate how all Australians, because 43 cents out of every dollar goes into royalties and taxes, and then there's salaries on top of that, benefits from the commodity boom that we've got out there.
You must look at the situation in particular in relation to the states and their stance on royalties and realise that there's a really major problem here that needs to be resolved. And I would have thought you'd be looking at that with some trepidation.
Alan, again, perhaps I'm too sanguine about this, but we've given our input last year. We believe that we've agreed to something which we have the full intention to pay, and which we've taken into our planning. I mean, we work by the rule that if you've agreed to something, you normally try and make that work rather than the other way around.
Thanks for joining us, Marius Kloppers.
Thank you very much.